Manish Raychaudhuri joins us now. Let's understand what he makes of the market dynamics, where he feels market sided. Manishi, we were in a range. We are in a range. Do you think we are likely to remain in a range?
It's all about the Fed now. And we will get jobs report this evening. It'll quite likely strengthen this whole higher for longer attitude that the market has. We will get the CPI report, particularly, I think that's on Monday, and in particular, what to watch out for would be the core services CPI that comes out of the US. And we believe that all these data points would actually strengthen the currently prevailing wisdom that on 22nd March, we will have a 50 basis points hike. Remember that even a couple of weeks ago, that expectation was of 25 basis points. Today, the probability attached to a 50 basis points hike is possibly about 60 to 65%. So there's been a profound shift in this, interest rate cycle outlook. And market is now currently convinced that it'll be not just a higher for longer kind of scenario, but possibly a much higher for much longer scenario. So this is something the market is trying to come to terms with. What you saw overnight in the United States is an indirect effect of that. When you have a spike in rates, obviously that leads to these basically credit events, as we call them. Now, in Asia or in India, we don't really foresee any of these major credit events. There are highly leveraged companies, no doubt. But on an average, the extent of leverage in Indian corporates has declined to just about 50%, 0.5 average debt to equity ratio. So I think, broadly, the Indian corporate universe is relatively safe, but there's no escape in the near term from what's happening outside India.
Do just sit tight, don't do anything, or it's time to raise cash, because what you've outlined is a plethora of bad news which could be hitting the market now.
Unfortunately, good. And, we will have to sort of grin and bear with a situation where the rates go up quite considerably compared to what we were thinking even about 3 or 4 weeks ago. The rates would stay there for much longer. Now, it also, of course, is giving rise to a situation where some good stocks are being hammered down. Consequently, there are some stocks within the private banking sector universe in India that has come down quite sharply. There are some sectors within India which are actually bucking the trend in rest of Asia. In rest of Asia, we're seeing the exporters are suffering because of the likely demand contraction in the developed markets. But if you look at the classic exporters in India, like IT services, their deal wins are
Seem to have snapped that link. Just going to get back to Manishi in just a second from now. But just looking at the kind of plunge that you're seeing in the markets, we're down 215 points now for the Nifty futures. So we've broken that 200 DMA as well, sitting sub the 17,400 mark, 17,393 on the Nifty spot, and just about defending that on the futures. Adani Enterprises down 4.5%. India Mart has fallen 3.5%. We were talking about the weakness in banks, which is led by RBL Bank within the mid caps and ICICI Bank amongst the larger ones. 3.25% lower for RBL Bank. Idea is down 3%, and FSL as well, which has been falling off late quite a fair bit. That's down another 3% as we speak. I'm just going to quickly draw up the list of where is it that you're seeing some fresh shorts as well. So besides the list that I talked about, there's Coforge, there's Bajaj Finance, there's SBI Cards, Tata Chemicals, IndusInd Bank, HDFC Bank, Canfin Homes, Bandhan Bank. So it's largely banks which are really taking it on the chin. While we do try and get back with Manishi, let's also hear it out